Many people think venture is the same as private equity, and it really isn't. It's kind of the opposite in many ways, as you guys know. Oftentimes when you talk about secondaries, people think big discounts, distressed sellers, and actually for us, some of our very best performing deals we've paid a premium for because it's been exposure to a great company with a lot of growth ahead of it. There's about 3 trillion of unrealized value sitting in venture funds globally. I think there's no reason why venture secondaries isn't a $100 billion market in pretty short order.
No, I think the challenge with all of this is that 2 wrongs don't make a right. And so, we've lumbered ourselves with rules and regulations and all the wrong stuff. And we've had a less dynamic, economy and a less dynamic tech sector. And so therefore, we don't have some of the companies we'd want.
Matt, I've got a very unfair question for you. If you're an MP sat in Parliament now, would you rip Palantir out?
I wouldn't rip them out, but I would be panicking about how we can get ourselves into a position where there is a swap out that you can do.
Hello and welcome to Upside, where every week we look behind the headlines that are going to affect European venture. We have on the agenda, it's EU Sovereignty Week. Europe's got a Palantir problem. The enterprise challenges AI spend. Who's now in the $80 billion club? America sues its own. Deal of the week and predictions. Today, it is Mads, myself, and we have a very special guest. It is Matt Russell from VenCap. Huge round of applause, please.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Matt, let's do a quick intro into you. You are head of secondaries. You've been doing this a long time. You know this space extremely well. VenCap, where you are, is a 40-year-old investment advisory firm focused on investing in VC funds in the US, Europe, China, and India. And looking through your track, I can't find one important company that you haven't had exposure to in your time. But tell us a bit about you, your career, what secondaries are, how you got into this weird and wonderful world.
Sure. Good to see you. Thanks for having me. As a young boy, I always dreamed of working in venture secondaries. But in fact, I think I've just been quite fortunate to stumble into a fascinating asset class and something that's been, just growing tremendously.
And super sexy now, right?
Yeah. Yeah, I mean, when I started in secondaries, it was a bit of this sort of niche backwater of private markets. And now, liquidity is top of mind. Technology has dominated the market. And so you've got these really interesting structural drivers whereby technology has become an increasingly larger share of the economy, I think only accelerated by AI. And at the same time, companies have stayed private for longer, which has meant people have turned to the secondary market to generate cash.
So what do you think, if you were kind of putting your crystal ball hat on, what do you think is going to happen to secondaries in the next 18, 24, 36 months? Pick a timescale.
Sure. I mean, I think so at large, the secondary market, if you're talking about cross private equity, venture and other asset classes, 200 billion market. This is talking about funds. And then there's the kind of directs piece as well, which we can get into. I mean, it's a function of the primary market, right? So unrealized assets sitting in funds and how much capital people are getting in terms of distributions, that drives the secondary market. Globally, there's about 3 trillion of unrealized value sitting in venture funds globally. It's a much younger market than private equity. And so you can kind of point to that as a bit of a proxy for the growth ahead. I think there's no reason why venture secondaries isn't a $100 billion market in pretty short order, just given the amount of capital has been raised, the growth, and some of the very best companies have stayed private much longer.
Yeah, no, I can see that. Is there anything that people get wrong about secondaries, or anything that people don't know? Are there any kind of common misconceptions that you have in your industry?
Yeah, I mean, I think some of it, goes back as well to kind of how we approach things on the primary side. But many people think venture is the same as private equity, and it really isn't. It's kind of the opposite in many ways, as you guys know. For us, there is, like quality and access are absolutely everything. And oftentimes when you talk about secondaries, people think big discounts and things distressed sellers. And, actually for us, some of our very best performing deals we've paid a premium for because it's been exposure to a great company with a lot of growth ahead of it. That's what's driven the bulk of our secondary returns, rather than buying mediocre stuff at big discounts.
Yeah, interesting. I can see that as a common misconception. So let's start at the top of the docket. Now, I've seen a number of news stories this week about sovereignty, and Brussels is rolling out a sweeping tech sovereignty package. We've kind of heard this before. It's kind of been in the news cycle before, but it feels like there's a lot of activity around the CHIPS Act, CADA, and a whole bunch of other very kind of deep-rooted sovereignty pushes. The challenges are all still in bold print in the Draghi report, which we've talked about many times. Now, Europe leans on non-European tech for 80+% of its services. I'm sure that's no surprise to many. And here's a fun fact for everyone. European households invest roughly 300 billion a year outside the EU, and mostly, no surprise, into the United States. At the same time, Macron is holding his last hurrah in Versailles. He's doing his startup nation Raz, talking about in France 110 billion of AI pledges, SoftBank investing 75 bill. But legacy debt, well, debt is going to be his legacy, should I say, up from 2 trillion to 3.5 trillion, 115% of GDP in France. So lots of challenges over there. So questions for the room. Mads, we haven't heard anything from you yet, so I'm going to bring you in first. Well, first up, what do you think about all this news and sovereignty week? I've got to put my teeth in, and this Brussels rollout. Where would you start on this one in general?
There's so much to dig into, Dan, and you almost sort of have to pick your vector, right? Because there's so many things that are flowing together, so many strands happening at the same time. I think maybe a good place to pick up is this CADA, this Cloud and AI Development Act, and I'd say in many ways that's not about building our own Google. It's sort of more about making sure that critical workloads don't have a foreign kill switch and can't be subpoenaed under the cloud, kind of the US Cloud Act.
Yep.
And so the attempt here is to say, look, there are different criticalities of workloads. Some of them are in defense, some of them are maybe in sensitive healthcare areas. Kind of the more sensitive these things are, the more European sovereignty has to go into how they're delivered. So what does that mean? Well, it means that you take all the different workloads you can imagine that governments buy. So this is all about how governments around Europe, they buy stuff. And then you say, depending on how critical they are, we're going to put them into a tier, sort of from level 1 to level 4. With level 1 means kind of all levels have some level of sovereignty. Level 1 means the data has to be on EU soil, right? So just kind of the data centers have to be here. It's not quite easy to do. Just put them in a data center, kind of with a local region. Up to level 4, which means a full EU supply chain, no foreign interference. Kind of it's kind of really, you can't, no risk that things can be switched off remotely. And so Brussels is trying to roll this out and sort of saying, look, we've got to start procuring in this way, and everybody in Europe has got to do this. It's not the law yet. It's a proposal. I'm sure lots of things will happen before it becomes. But it's interesting to see the direction of travel. And there are lots of things we can double click on here.
Matt, what do you in VenCap, how do you think about this whole sovereign piece? I'm assuming it's not big on the agenda because obviously you're a global organization, but does this come into conversations, and if so, how?
Yes, we're fortunate in the sense we've got a global portfolio. We've never sort of set geographic constraints, and so we've just found by, in our mind, kind of backing the best global managers, we've ended up with sort of a world-class venture portfolio on a look-through basis. To give you a sense, today it's about 2/3 US and then probably 10 Europe, India, China.
Are those percentages changing? Are you looking more like with everything that's going on in China as an example, or has India's boot? How do you apportion that over time? Is that going to change?
So we put everything up to a sort of global maxima in our mind. So it's, we don't think about it as that we think we should have X amount of our portfolio in India because we think the macro is interesting in India. We think we'd probably end up with perhaps a degree of adverse selection if we did that. I think it's just like, this is a fascinating topic because, you're just talking about a global asset class. I think that's one of the, historically why you've seen those enormous power law outcomes is because of that sort of frictionless nature of the market globally. But, as you do get into a new paradigm of perhaps some degree of deglobalization, that will, I think, have some interesting implications for our, what that mix for us looks like in the future. And you may end up with perhaps maybe not one or two globals, but those regional champions. The bit that does concern me a piece is just like putting constraints on businesses for political reasons. I think there are really important things that come with security and data and all the rest of it. But at the same time, if you're hamstringing businesses in a fast moving competitive space, it's going to be kind of lead to pretty undesirable outcomes in the end. So we need to find a way to offer alternatives.
Yeah, I think we're going to talk a little bit about Palantir and this. Sovereignty is running through, I think, every single thread in today's docket, but we are going to look at some very specific cases here. And it's just
Matt, Matt, maybe just double clicking on that for a second, Dan, if that's okay.
Yeah, do it.
Because, on one hand, I'd say I completely agree with you. Listen, let people trade, let business flow. It's the best way to create wealth for everybody. At the same time, we've seen a sometimes quite belligerent U.S. administration that have signaled that the kind of some of the old alliances are maybe not what they used to be, that some of the views around whether you can use some of these levers that are being had to put pressure on even on allies, that some things that would have been unthinkable in the past are maybe no longer unthinkable. How do you think kind of European citizens and politicians should react to that? I mean, what's kind of a reasonable response in that context? And you sort of take the extreme, right? There were fears at some point that kind of, Lockheed Martin, would be put under pressure from the U.S. administration to, click a kill switch that could disable the, fleet of European fighter aircraft. I mean, that sort of thing in the extreme. How should we think about this?
Yeah, I mean, I think control is important. I think there are going to be beneficiaries of this dynamic. I think for example, Mistral in France. I think that being where they are and setting up the infrastructure around them, getting away from the kind of the Cloud Act issue, I think they'll probably be a beneficiary of that. If you are a French bank or insurance company and you're concerned about your data, there will be inevitably beneficiaries from that dynamic you've described. But I think it just takes time for those companies to pop up and evolve.
I saw, was it a company called, I think they were called Avendar, they're Dutch, and they've come out of some kind of Dutch government quango where they're starting, it's very early, I think it was a 2 million seed round, but it looked very Palantir-ish. And I'm just wondering how many EU governments are going to push or support the sovereign tech piece. They can't go up against Palantir anytime soon, but I thought that was quite an interesting angle. And obviously Mistral is probably the leading light in that bucket. Mads, I didn't mean to kind of hijack your question. Is there any other directions you wanted to go in?
Well, there's so many other things to double click on here, which is one of the things is, what constitutes independent from third countries? What constitutes owned and controlled by? What constitutes fully sovereign? I mean, where do you draw those boundaries? And one of the things some of the bigger cloud providers have tried to do is they've said, look, we will, on a selective basis, license the whole platform to European operators. So Azure, kind of Microsoft, they have had partnerships with Capgemini and Orange in France, and also with SAP in Germany, where they've licensed the whole platform. So you can buy, if you're kind of the French or the German government, you can buy from Bleu, which is kind of one provider, a full Azure service that's operated by French operators that have licensed the Microsoft tech stack. Same in Germany, right? So Delos is again, it's Microsoft Azure run by SAP. So you have kind of an attempt there trying to create something that is owned and controlled by the kind of EU players where you simply just license the technology from abroad. And Microsoft has agreed to this. Google has an agreement with Thales in France, their S3NS, where you can get the Google Cloud delivered that way. AWS has not done this. So
I thought they had.
I'm pretty sure they haven't. I think they've created something that looks more like a JV or some local entity with a local board,
Yes,
but not
they have
actually
done that, yeah.
licensed the technology. So you've seen the three cloud majors take different approaches. And one of the things that'll be interesting to figure out is what will ultimately constitute something that can pass the level 3, right? Owned and controlled by. Is it enough if you have a local subsidiary with a local board, local citizens that have some governance, or does it have to be licensed to and actually completely owned by a local player?
Question for you, Mads. How would it work? I mean, hosting is one thing and cloud provision is one thing, but the AI models that sit on top, I'm intrigued as to where that line in the sand is, or how that divide will be seen by the regulators in the EU, because it's fine, I think, to have a hosting company, if you like, or one of the hyperscalers running the platform. But when your data is being processed sitting on top and the AI is then laying on top, how is that going to work? I'm assuming it would have to be full sovereign for anything government would have to be full sovereign. Here, I mean, we can't even license the IP from Anthropic, if you like, to then go off and build our own models, because that would still be bucketed into the cloud, what was Trump's act called? Was it the Cloud Act? Anyway.
Cloud Act, yeah. So I'm not sure it would, and this is one of the things we'll have to work out is will the model provisioning be seen in the same way, i.e., just like you can go to Microsoft today and you can rent OpenAI's models off their stack and they're providing them. Well, could you imagine doing that in Europe from a European provider like a Bleu or a Delos that have fully licensed the US models, so they run them locally and they are de facto the service provider, just licensing some IP.
I don't know how would they run updates? How would you? I mean, you'd have to have people from Anthropic or whomever, OpenAI, within the European organization running as a totally separate, independent entity. I don't know how you do that. Anyway, Matt, I don't know if you got any.
I think the point is there's lots of stuff to figure out, and this is kind of, I think, the interesting bit.
Yeah, really. Matt, anything else on this topic before we move on?
No, it's fascinating. I think, and again, I think the important test will be like when it actually comes to, I guess, getting tested in a situation whereby it gets a situation where the US government needs to review one of these constructs and determine, where that line is.
Yeah. Can I have a back door in, please?
Yeah.
Yeah, we'll see. Mads, on the strategic front, anything from you before we move on this?
Well, so it's clear that, where does the legal structure sit around providing a service? That's just one step. And I think everybody's sort of asking, is there more we can do? Can we actually create some local champions? Can we build some winning companies? We've sadly seen, Arm is a fantastic European company that's right at the center of this, but where the gravity very much has shifted to the US. We've seen you talked about Macron and his big initiative now, sovereign AI. Well, I mean, instead of it being US players, it's SoftBank money, right? It's Japanese money that's building data centers. I don't know whether that's very different. What we really should do is we should complete the single market, because that's what will make a difference. We should unlock pension capital, because capital will make a difference.
There he is again.
Yeah.
Let's do go.
Well, no, but listen, these are the big. I sort of worry a little bit that we're tinkering with the legislation again over here instead of actually doing
and it's money. Capital flows. Yeah,
some of the stuff that will unlock. But
yeah. Well, let's go straight into Palantir, because this very very neatly runs into this, the Palantir problem, as I've titled it in the docket. Now, we've had a number of news reports this week about how MPs want the government to basically tear up the Palantir's £330 million NHS data contract and then give it to a British supplier. Obviously, there is no British supplier. Also, the 240 million from the MOD had no competitive tender. That was all waved through to NHS patient data. So Sadiq Khan blocked a 50 million Met deal on the side. Also, this week, seen the Dutch, Swiss, Germans, and a few other Europeans all working at how to pull Palantir from sensitive operations. So coming on from the sovereignty piece that we were just talking about, what is the reality about the Palantir challenge specifically, and I guess the capability versus values piece? We've talked about this before, but Mads, can you tee up a little bit more for this, and then Matt, I'm going to come to you for some thoughts, if that's okay.
Yeah, so Anwura, who's an MP, I mean, she's kind of been championing this in the Commons, and I would say she's no lightweight. She's one of the few, if not the only chartered engineer in the Commons. She's had 20 years in the telecoms industry. She's been building things. We should probably take her seriously in terms of some of the concerns she's raising. And I think the lock-in worry that she raises is legitimate, because this is not just about data and where the data sits, but it's also about, once you have an enterprise platform that's embedded in a large corporate or it's really hard to get out again. So I think some of these questions that are being raised, I think it's right to raise. Now, at the same time, she is a pro sort of innovation interventionist, and her instinct maybe is to reach for the state, whereas maybe we would say, look, are there free market approaches you could find instead? What is the federated data platform we're talking about here, and why does it work? So it's not one database. It's a system that sits on top of all the different trusts data, and then is used to create lots of digital twins of how hospitals run. And from everything we can tell, it really delivers for the NHS. It's enabled, cutting stays and producing more, better patient outcomes and more of the right things we want. So lots of good efficiency coming out of it. And the challenge we have is, everybody knows we need tech to make government more efficient. And some of us are old enough to remember the National Program for IT.
Yes.
So in the Blair years, there was this huge, mega billion-pound project to completely rebuild all technology for the NHS. And finally, in 2011, it was scrapped. And by then, £10 billion had been spent. And there was nothing to show for it. It had been an absolute failure. And so I think there's a concern that if we are saying, well, now what we need to do is to scrap Palantir, to buy a British thing that doesn't exist yet, all we're going to have is another national program for IT that will run into absolutely nothing. And so the question is whether there's a better way here.
Matt, I've got a very unfair question for you. If you're an MP sat in Parliament now, would you rip Palantir out?
I wouldn't rip them out, but I would be panicking about how we can get ourselves into a position where there is a swap out that you can do.
Yeah.
Like the problem is all of these things take time that we're talking about. So it's often this sort of like side by side comparison. But if you don't have some of these difficult conversations and make these difficult moves, then nothing changes.
I'm always trying to work out.
It's just really hard not to end up in this just like adverse selection game.
Yes, we talked last week about picking the B players because we got something in whatever France that we can use. It's not quite as good, but probably not the best angle. We got to get the best tech doing the best job.
Yeah,
and it's obviously where that challenge is between this kind of whole values piece and is this a good company and has it got the same values in mind as our value set? It's just a really tough gig.
And I think having that doing the intellectually honest and truth-seeking side by side with these pieces of analysis and saying like, this is what we're sacrificing here in exchange for this, or this is what we're subsidizing here in exchange for this, as opposed to trying to treat these things as like comparable when they're not.
Yeah, totally. Mads, what else would you add?
No, I think the challenge with all of this is that two wrongs don't make a right. And so, we lumbered ourselves with rules and regulations and all the wrong stuff. And we've had a less dynamic, economy and a less dynamic tech sector. And so therefore, we don't have some of the companies we'd want. And then you sort of reach for some of these kind of maybe slight governmental overreach and try and regulate or legislate your way out of a problem you created 10 or 15 years ago. And that's probably not the place to start, right? I think it's probably much better to focus on how can we create an economy where we can build these technology champions, because that's really what we need. And there may not be a quick way to do that. I mean, maybe we'll just have to accept that it's Palantir for now and then ask what conditions do we need to put in place so that we can win the next one.
Yeah, yeah. But then, as we know, it's just really, really hard to rip out. But maybe they can do it in silos, and then there's an opportunity to not being one aggregated conglomerate platform. But we'll see. Okay. Well, talking of AI and its integration and usage, we saw a number of stories this week about companies complaining about employee spend effectively. Uber has capped staff at 1,500 quid a month per tool after torching its entire annual AI budget in just 4 months. We also saw Pizza Hut being sued over a system that delivered cold pizzas, Starbucks binned a tool that couldn't count milk. So there's obviously all of these AI implementation challenges. Consumption-based token pricing means that nobody can forecast spend. So what I'm trying to do here is unpack the PR versus the reality. Will the enterprise continue to challenge AI ROI? I guess the first question, maybe to you, Matt. I mean, I don't know what you do in VenCap with regards to AI platforms, and maybe you can give us a bit of an insight there. But I mean, how would you measure it? And you can answer that personally or as part of the business. But first up, what are you doing, and how are you applying AI? And then how would you, if you were running any organization, how would you measure the ROI?
Yeah, I mean, we're fortunate, right? We've been around 40 years, and since the very beginning, have tracked all of the underlying data on all the funds we've invested in. So that's 500 funds, 17,000 or so underlying portfolio companies. So we benefit from a rich data set. And now, I think AI provides the opportunity to sort of turbocharge a lot of that kind of analysis and data work that we do. Like for us as a business, we've very much been sort of in the experimentation phase for a while, trying different,
like most people, I guess.
Trying different tools. It's still moving so quickly. It's just it's a fascinating one as you get to sort of talking about things like ROI, right? Because like in my mind, long term, it's a margin thing, right? We're talking about, I mean, obviously people worry about displacement of labor and things like that, but like for me, it's like it's also a leverage thing, right? You know, people just being a lot more productive, focusing on higher value work, and as I think about that, like what that means then for the business is the margin thing, right? So it's whether you think about that on a percentage margin basis or on just on a quantum of margin basis for a business. It's just hard to do that kind of analysis in very short spaces of time, right? When you're still iterating. And for us, it just ends up becoming anecdotal. Like for me personally, it just makes what was historically pretty painful exercises like instantaneous in terms of.
But you're experimenting, right? I think you've nailed it on the head. You're in experimentation mode, and obviously personally and as a business. Is that fair?
I'd say so. I mean, I think like we benefit from like obviously the industry that we're in and where we sit, that we kind of get to see what some of the very best firms are doing, and we're kind of trying to sort of take their lead somewhat. But like I think also being honest with ourselves, I think we are still in the early innings of a massive technology phase shift that's still yet to find its sort of equilibrium.
I think I was at the UKPC, the ex BVCA conference. I think when was this, beginning of the year, and I was doing a panel, and there was maybe 250 VCPE crowd, and I said, be honest with me, how many of you are using AI where it's actively moving the needle for your workflow? It's really, really making a difference to your workflow. Not experimentation, but really, really it's embedded and making a difference. And only a small smattering of the 250 people in the room put their hands up. So I think it's a fair proxy for most businesses in the experimentation phase where they're just trying to work stuff out. Do we build? Do we buy? How do we integrate? What goes where? How does it all fit together? And which departments get affected with what? And I think this rolls into the whole Uber CEO story talking about capping spend, because I'm not sure how better Uber's business is because of this mega spend in AI in the last 4 months. What have they proven? What have they done faster or better or smarter? That wasn't in the article. It was just the sheer fact they're spending a shed ton of cash on all of these AI toolkits.
Mark, and the reason he talks about this as sort of modern day alchemy, the kind of historically alchemy was this idea of being able to turn
Lead
lead
to
into
gold.
gold. And, people were looking for the philosopher's stone and the ability to do that, and sort of thinking, look, if we could turn lead into gold, what an amazing thing that would be. And of course, many people tried and nobody ever succeeded. And what we've succeeded in doing with AI is to turn, as Andreessen says, sand into intelligence, because we can literally take, create silicon, which is created out of sand, and then turn that into sort of thinking capability, which is magic if there ever was anything. And suddenly, not only have we created this magic, but it's available to everybody. We all have it, right? You can, even consumers can go online and sort of, use Gemini for free. So suddenly we all have this magical power, and everybody's rushing to find out, well, how can you actually use that to become mega productive? And of course there is, as you say, Dan and Matt, a lot of experimentation. And that is why we're seeing, I think, so many of these gyrations right now, is everybody's rushing, everybody's experimenting. Personally, I think it's super exciting. Of course, it's good we have some bean counters that are going to look at the bottom line and make sure there's return on investment. I have no doubt that will be the outcome.
How will they do that, Mads? You've got a great brain for this kind of thing. How would you measure ROI?
Well, I mean, that's easy. You look at cash flows. At the end of the day, everything has to translate into money. That's why money is so great, right? Because it's
it's the ultimate token.
We can keep score of everything else. Yeah. So, but people are sort of expecting that, because they started using Claude and I don't know, last quarter, it'll show up in, massive profitability this quarter. Business doesn't move that quickly, guys. I mean, it takes a little bit of time to work out how everything should flow through and how to restructure and everything else. But it's happening. There's no doubt.
Yeah. Well, let's talk about those that are making a shed ton of cash and are raising a shed ton of cash. We've got, what I've got next on the list is what I've called the $80 billion club. Everybody seems to be raising 80 bill. So Anthropic, far to go public, jumping the queue of OpenAI. SpaceX at a near 2 trillion. I think their latest is 1.85. It moves a little bit every now and then. They're going live in a week. So they're going live on the 12th. It's the 5th of June as of recording. Alphabet raising 85 billion on top of 100 billion in debt. Their little warranty, the 100-year bond. Warren Buffett, I know it's not him, but it is him. But is it? Is he still the chair? I don't know. Mads, I'm going to lean on you for that one. He is the patron saint of I Don't Get Tech. He's in for 10 bill into Alphabet. So the 80 billion club, Mads, tee this one up for us.
We are all looking at these mega IPOs that are lining up. It'll be the kind of the biggest IPOs of all time, sort of all happening within 1 year. All very exciting for all market aficionados. The question some people are asking is, where's the money going to come from? Can the market absorb all these big IPOs? There's been a lot of analysis done on this. Goldman recently released a study saying actually the IPO activity right now is very low compared to what we've seen historically. This year looks like there'll be 100 IPOs, 250 in 2021, about 400 IPOs in 1999. So we're not at the top when it looks at sort of volume of IPOs. When we look at value, we've also seen issuance in terms of kind of total percentage of market cap as being below the historical norm. We've historically seen around 1.5% of market cap being issued on average every year. Now it's around 1%. So on all these parameters we're looking at, it looks like the market will be able to absorb it just fine. And why is that? It's not necessarily because we need lots of new money to come into the market, but because corporates keep buying back their own stock. So buybacks are huge buyer. You have all the kind of the boring, businesses over here buying back their own stock, and that's then flowing into, hopefully great new technology companies that will make change in the world. And if that works the way we expect it will, that is capitalism doing what it does best, taking money from where it's no longer needed and reallocating that to the next generation of good things.
The floats are tiny, right, Mads? I mean, the floats are, 85 billion is obviously a lot of money. Anthropic's a little bit less than that, I think, but it's a lot of money. But in context, at a 1.75 trillion, wherever they land, the floats are actually, as a percentage, are actually quite small. Is that fair?
That's exactly right. What Goldman has also done is they've tried to forecast that into the future and say, okay, initially you'll float 10% of the company. What then happens over the following year as lockups start to expire? And even with those lockups coming off, the expectation is there'll still be plenty of demand in the market just because of the level of buybacks we're seeing.
Well, at least, I mean, SpaceX, I've tried to make head nor tail of the S1, but I'm pretty sure that Elon and the core investors are locked in for over a year. I think it's like, whatever, 366 days. And that's what, 50% of the market cap. So I think, I don't know. I mean, there are a lot of lockup rules, pushes. I think 6 months is probably the median where there's going to be some more availability. Everything that we'll really know about these companies won't happen until 2027. Ooh, interesting.
Yeah. I mean, look, so just maybe double click on that one, Dan, because, the saying from some of the big banks, they shall always remain unnamed, is, we always talk about conflicts of interest, and some of the more successful banks are saying, no conflict, no interest. And as we know, there are certainly some banks that are sitting at both sides of this, right? Goldman's there saying the market will be fine. They're also running the SpaceX IPO.
Yeah.
So they're obviously, well ensconced in what's going to happen here. And on their own analysis, they're sort of saying, look, the way we can get to a $1.78 trillion valuation is for the OpenAI, for the SpaceX AI revenue to increase by quite a lot over the next few years. They're saying from now on until 2030, it needs to increase by 100x, which is a fair chunk over 4 years. So sort of growing from your $3 billion to sort of $300 billion. So is that possible? I mean, it'll all come down to space AI and whether people believe that that's going to happen in those timescales.
Matt, if I could put you on the spot, who would you buy?
We've always done well by having a portfolio in the very best companies. We aren't stock pickers.
Yeah, for sure. But I mean, if you had your last $100, who would you put it on? Are you an Elon fan? Do you believe in
I think people have always done well by backing Elon. Clearly, as Matt's saying, like there's quite a large revenue bridge there, right, to get to those kind of numbers. But like we've just seen time and time again that those top 1%, or these are kind of top 0.1% companies continuing to surprise to the upside. What we've always seen when we've underwritten secondary portfolios is we've always been too conservative on the winners. Time and time again, we've undermodeled it.
And I'm pretty sure, is it David Clark, your CEO?
Yeah.
I'm pretty sure I saw somewhere at some point the AI isn't a bubble video, and it feels like VenCap, and it was very comprehensive and thoughtful. And go to the VenCap site and look it up if you haven't seen it. But it was an interesting breakdown of why this isn't the bubble that it has been of years of old and decades past. So it's interesting that you say that you've always been a bit too conservative, because I mean, obviously there's a lot of real money and there's a lot of real activity that we haven't seen in other kind of bubblish bubblers. What else did you want to go into, Mads? What else would you pick up on here?
Other questions you asked about Alphabet, does Google really need the money? Is there any signal from Buffett in the Berkshire purchase, et cetera? I think, Buffett is not making the investment decision here. I think that's Abel who's running the book. And he's really more of maybe an operator than a stock picker, if you could say. Yeah. We don't have much of a view yet on exactly how he thinks about this, or at least he will say things, but we don't have sort of a decade-long track record of saying this is how he's going to administer the money. So I think it's too early to read too much into that.
Okay. I mean, obviously Alphabet is all CapEx, right? This is all we need to build out. We've got such demand for our services. We need more data centers. We need more hardware provisioned. Is that right?
Mm-hmm. Yeah.
Okay. There was a story this week about America suing its own effectively. And as we know, the standard behavior is Europe legislates, America sues, and we kind of go around in this merry-go-round. But the table turned, America is suing its own. Florida just became the first state to take AI to court. Now they're suing OpenAI and Sam Altman personally for an unsafe product off the back of a criminal probe tied to a campus shooting. The same week, Trump has watered down his AI order. I've forgotten the name of the order. If anyone remembers, please remind me. But it's basically made the whole AI regulation control piece largely meaningless. For an example, They had this 90-day mandatory review. It's now become a voluntary 30-day review, just as Mythos is now going to another 150 companies across 15 countries to be tested and trialed in the wild. So what is happening with Florida suing? Should they win? Will they win? Mads, can you tee this one up a bit better for us?
I think it's an interesting development. I mean, one might question why push it down that litigious route at all, and when does suing work, and when does it break, and why is Anthropic different from cold pizza? And I think it's just the recognition that there's some things that can break, and then you can have a trial, and there can be remedies, and that is okay in some situations. And then there's some situations when it's not okay, when it's it's out of the bag. We don't want somebody to take down the safety controls of a nuclear power plant and for there to be a big meltdown, and then rely on kind of a civil court case afterwards. Then it's too late. And so it's figuring out when is the harm bound to a sort of a more local issue that you can run a trial over, and when is it more unbound, where sort of once it's out of the bag, it's spreading and there's diffusion and it's too late. And I think it's figuring out which is which. And to some extent, I think that's what we're seeing now, is regulators and politicians are trying to work that piece out.
Matt, have you got any thoughts on this one?
Not much to add beyond that. I think it's that, some of those fundamental things around, like, what are those core guardrails, those kind of non-negotiables, and then inside of that, I think we have a system that's quite well placed to iterate around errors.
I wonder if we'll see any more. I wonder if this will open up other lawsuits or open up other challenges. It just feels like a super weird thing for them to do.
I mean, another vector in this, Dan, is kind of the personal naming of Sam Altman in one of the depositions, or one of the trials. The point there is, look, we have limitation of liability in our corporate codes for good reason. It's sort of load bearing to entrepreneurship, that you're able to stand up a business, and the business is at risk, but people have a limitation of liability. So unless you really, if you do something that kills somebody, maybe that you could have personal liability. But even there, I think the bar is quite high, because at the end of the day, if business can't operate, if we can't innovate, well, then it's almost sort of back to the Stone Ages, right? So you need to have that limitation there. And yeah, again, I think there's something there to work out. I understand why people do it, but it feels maybe a little bit recessive.
Yeah, and I guess we're pretty good at fining in the EU. I wonder if we'll see any other versions of this over here. I doubt it, but maybe we'll see more in the States. I have a prediction which is kind of aligned with what we were talking about before. So what we try and do, Matt, is I always look at the things that we've kind of researched and learned in the week, and then I try and work out what my prediction would be from all of the stuff that we've thought about and talked about, and is there something that I think that we'll take forwards. And I use it as a thought experiment. So I use it as like, it's not necessarily a prediction set in stone, I'm going to put my children's lives on the lines here, but I use it as this kind of broader thought experiment. And here's mine for this week, which is that Europe cannot achieve total pure AI self-sufficiency. I don't think many would argue with that, but it will achieve strict sovereign control, and will do it by splitting into two. So we've got the state tier. Government critical infrastructure will run solely in the EU on things like Mistral, Aleph Alpha in Germany, hosted on native cloud infrastructure, as we've talked about before. But the commercial tier will effectively run on tamed or legally compliant, bucketed and worked Anthropic models, OpenAI models, run on this kind of hived off AWS or Azure infrastructure. And that's how we'll run the commercial tier. So no great shakes there in my prediction, but I think we will in 27 see that two-tiering of AI, if you like, AI and hosting and infra. Anyone got any thoughts on that before we move on to deal of the week?
Yeah, seems plausible. I mean, I think there'll be lots of open source in use in many different situations, because I just think there are many places where it makes sense.
European, right? European OS.
No, any kind of open source.
Chinese?
Yeah, why not?
I can't see how my take also on this as a kind of a follow-on is that we're just not going to see I've always thought that the Chinese OS projects would make much more inroads into corporate land through government infra, and I just can't see it anymore. I think I have to change my mind a little bit on this. I just can't see how it's going to pass any kind of regulatory muster. If you're doing anything in a regulated space or anything to do with touching data patient records or whatever it might be. So I'm not
But lots of
sure.
workloads aren't regulated.
Sure. Yes. Obviously, in the lighter private stuff, I'm with you. But anything meaningful, I just can't see Chinese OS making any inroads, which is a big shift because I always thought this would be a big part of the stack, but I'm not convinced anymore. Is that
Okay, I mean, just maybe you're right. I mean, just kind of the other side of the argument is that clearly coding is the most important workload right now. You're talking about important workloads. Coding is the most important, and there's a lot of Chinese open source software or open weight models that are used there. Even if they are maybe slightly tweaked, we know that some of the stuff Cursor did before partnering with X was leveraging open, Chinese open source or open weight models as part of their coding stack. So yeah, I do think you'll see it, but maybe you're right. You may not be using it for patient records. I don't know.
I've kind of put it in the MVP bucket, as in we get off the tracks, we start building our own models. Therefore, we're going to use whatever is low cost and easy and has the least restrictions at the lowest cost. So
I heard I think just to jump in, I heard a good analogy the other day thinking about like market construction around models, and I was sort of like previously kind of had in my head that you'd end up in this sort of, I don't know, oligopoly equivalent to, I don't know, like the electricity industry or something. But like that, the error in that thinking is that the models are commoditized. Someone put forward quite a good analogy, which was thinking about them as airlines, as in a lot of upfront investment required, but they will all be quite different and serve different needs. And inevitably you'll end up with, to your point, Dan, like those sort of low cost carriers. And then at the other end of the spectrum, you're going to have private charter working on, with proprietary data sets at the super premium end of things. I thought that was I've not heard that before. It's quite a nice analogy.
Yeah, no, I think that's a nice analogy. I also think one of my big previous predictions has been the on-prem piece, where we're going to start to see specific tooling purpose-built within or for companies that live on-prem. And I think there's going to be a bit of a blended affair. We're going to start to get out of this experimentation phase and working out what we really need to run our businesses. And that will be a blend of different AI models delivered in different ways for different tasks within a business. And I think that's going to be really exciting as we see rubber hit road in those very specific ways to run the business. Mads, your deal of the week, go.
So last week we spoke about the Pope, and we spoke about
And
this,
we did.
this kind of his new
Was a bit of a weird one, wasn't it? Getting all religious
it's
on
kind of
us.
his views on AI and how all that connects. And I think that sort of connects to, if not deal of the week, then heralded deal of the week in the sense of stock. They're talking about now raising 300 million euros at 2.5 billion. I don't think it's closed yet, but it sounds like it's on track to happen. Headquartered in Berlin, stock is a defense technology company. And what do? They do the stuff the Pope has told them not to do, which is they have autonomous drones, kind of loitering munitions that'll sort of fly around and then ID a target and then strike. And they also have lots of AI. They have Minerva, which is sort of a command layer that can control things. And I just thought it was interesting. I don't know whether it's sort of, the Catholics versus Protestant Germans or whether that's where the schism is. But all joking aside, I think we said at the time that there's absolutely no chance that we won't have autonomous weapons. Just can't see it because other sides will.
We already have, I would assume.
Yeah, to some extent, yes, right. And the question then is how far do you lean into it? And I just think that whether you like it or not, the move towards that is inexorable. It's gonna come, and the question is then what do we do about it?
Matt, is this the founder that's like 20 or 22 years old? I saw a defense startup, 2-year-old defense startup raising, I think just become a unicorn. And I'm pretty sure the founder's like 20, 21, 22, something like that. Is that this one?
whether he's just 21, I can't remember his age, Dan.
But I was reading, I was like, you've just stepped out or dropped out of uni and you've just started this defense tech business and it was like unbelievably young dude. Maybe it's not this one. I will find out and report back. My deal of the week is Gigaton. Now, this is the business that was formerly Carbon Re. Very nice business. I mean, boring to many, a love affair of ours, Mads. They help industrial companies run more efficient systems and release less carbon into the atmosphere. So they work with cement, steel, glass, chemicals firms. They've raised 26 mil to build out their control systems. So massive claps and a round of applause for Gigaton. I hope you absolutely knock it out of the park. What is happening this week? Matt, what are you up to this week? What's happening for VenCap or you, or what's coming up in your diary that's exciting? Are you going on holiday? Are there any exciting deals on the table? What's happening for you?
So, I mean, we're inundated with deal flow on the secondary side. So it's all comes down to kind of, picking our spots. It's a fascinating point in time, just given the technology phase shift that we're going through, how we think about picking and pricing deals. I mean, fortunately, we can be choosy, which is great. And hope to try and get a holiday in sometime. We've got a 8-month-old baby at home that doesn't.
Is this number one?
This is number one, and he's not.
Oh my goodness!
He doesn't sleep very well, so.
You need to speak to Matt. He's got 4. He's got 4 kids, and I think he's been through every variant there is. So you must speak with him about it.
Yeah, I need some tips.
Well, I had one that my son hates sleep. He never slept as a baby. He hates sleep, and my daughter would sleep in a bomb site. And so that was maybe, I don't know if you're going to go again and have 2 or 3 babies, but they're all different. So maybe hopefully the next one will sleep. Mads, any tips for sleeping?
Yeah, I mean, earplugs are good, right?
Yeah, we had hellish trouble. We had hellish trouble with our boy. Mads, what is happening in the world and what is happening for you in the weekend?
Well, we've got a real Dan day on Monday, don't we? I mean, it's kind of the Apple's big WWDC.
I'm an Apple fanboy, Matt. Just to share the context that most of my predictions are wrapped around something that Apple will end up doing, which they invariably don't end up doing. But that's why Mads is raising that. Yeah.
So the question is the real Siri finally going to stand up?
I bloody hope so.
And is it going to be wrapped in Google or Anthropic tech on the back end?
All of it. I thought the new theory was going to be that you could add in any model that you wanted. It's going to be a bit of a marketplace.
Fabulous. But that's not really the job style, is it? It's more like you can have any color you want as long as it's black. It's like, we'll choose for you.
I think this is a case of we really screwed the pooch. Let's just get the best and learn off the best. And then over time, we can build out our own. I assume. Allegedly.
So that's Monday, I believe. Thursday, we've got ECB meeting, and it looks like there'll be a rate hike, which is not great for the old continent. Obviously driven by the kind of Iran-driven energy shock and risk of stagflation and all that good stuff we come on the back end. So not super keen on that. Friday, however, all the excitement returns. SpaceX should debut on the NASDAQ.
It's a
biggest
week today.
IPO of all time. It's finally happening.
I'm assuming that it's going to be a bit of a nothing burger to start because everything is locked up, and my assumption is this will do well out of the blocks. Nothing to see here, but we'll really see how the market's going to react in, let's say, between 6 and 12 months. Is that fair?
I think stuff's going to happen sooner.
Really?
Yeah.
Really? Okay.
Yeah, I mean, I think I think Friday's going to be an exciting day in the public markets. I was just looking at Polymarket in terms of like odds of like closing market cap for Friday, and there's 9% that it's going to close at over 3 trillion.
Really?
That's
a 1 in 10 that it's going to close at 3.
Yeah, over 3.
I mean, it's the proper Elon magic, isn't it?
Yeah.
Because nothing that I can see in the laws of physics and maths makes any sense underneath Elon magic. But as you said, don't ever bet against the man. But
yeah,
okay.
The other thing, just on as you said, these S1s are pretty dense. The guys at Meritech do really great jobs on synthesizing S1s. They've done one on SpaceX. Particularly, it was particularly good around the lockup mechanism, some of those thresholds around performance of the stock and how that then translates to kind of what people can sell down. So it's for a simpleton like me, it's quite useful.
I'm definitely going to look that up because I don't often, apart from for Upside, this pod, as VCs, we don't obviously tend to look at publics and S1s. We do for the pod, but I'm really starting to lift my eyes off the desk and trying to understand more about some of the crazy things that go on elsewhere. So I will definitely look them up. All right. Well, thank you so much, my lovely gentlemen. If there is nothing else, we will call it a day and we will see you all next week.
Upside.